Hello everybody, this is Rich with High% Trading. Uh, Today's educational video is going to show how to trade the pit open, what I call the pit open, on various futures instruments. Now that's really a misnomer because most of the markets now are purely electronic, but this stems back to the old times when they actually had pits that would open up. Some still correspond with the futures electronically, but most of them are all pure electronics. However, they're still important from the standpoint of trading, and we're going to do some examples here. First one's going to be some equities. Now, as most of you are aware who trade equities, what we call the pit open is 9:30 a.m. Eastern Time. That's 6:30 Pacific, and I'm on the West Coast, so the charts that I'm showing are Pacific time. But simply, it's a very powerful, easy way to trade. The stops are very manageable, and you can get some very good runs that come out of the gate. What you want to be able to do is ascertain the opening time, and in this case, it's going to be 6:30 a.m. Pacific. As I indicated, that's 9:30 Eastern. What you want to do is ascertain the opening price at that time, and either draw a band, or if you have a technical indicator that can do the band, as we have in this case, it's called a time band. I've got this set for 6:30 Pacific. It's a very small band. It's basically 6 ticks. And of course, if you're able to adjust that, that's even better. This band is adjustable, but for the purposes of this video, I'm going to be showing it on 6 ticks. So this is our opening price, and what we basically want to do is when the market closes, or the trade closes above the price, you want to go ahead and go long. And here's an example. Approximately a minute and a half later, the ES contract closed above it. Your stop would be on the other end, generally. In this situation, since we did trade down here a little bit and then bounced up, you can move your stop down 1 tick. It's a good safe level. So in this instance, the long trade, we came through what we call our opening time band off the quote pit open, and the market moved up very nicely here in the span of about an hour. For if you're able to hold on to this for a very nice gain, basically about 15 handles. It's about $50 a handle, so it's a pretty nice move. It's a good way to trade. A lot of traders like to trade the what I call the pit opens, because you don't have to trade for not much of a long time. It's basically only an hour, hour and a half. Let's take a look at a couple other markets on equities, and then we'll move on and show some of the other ones at different times. All right, here's another example. This is the YM contract. This is the Dow Jones mini futures. It's $5 a tick. This is a very recent contract. This is actually yesterday's a trade in the YM. That would have been August the 5th. I'm sorry, August the 6th. So what we had basically is, here's our opening band again. Again, ascertain the opening price. Try to get yourself an indicator that will automatically produce the band as we have here. It's 6 ticks. As we traded down through it, that was a short, and you could see that in the first basically 8 minutes, you had a very nice trade down. So again, trading the pit open is very profitable, generally very lucrative. It generally does not generate a lot of trades through the band, because you've got a lot of momentum that is built up in these markets as we come in, and the institutions have their orders set to go, so it generally tends to drive the markets, and especially after big news days like we have on non-farm payroll, or manufacturing data, or ISM data. So let's show a couple of other markets now at a different time frame. I'm going to show some of the currencies. A lot of people trade currencies, and they trade during what I call the European session, which basically starts at 3 a.m. Eastern. So let's show how the quote pit open works at that time as well. All right, here's the 6E. This is the euro currency. This is a very popular futures instrument that is very liquid, has very good movement. A lot of traders trade this. It's $6.25 a tick. And so this is setting this at, if we look at this at 1 minute past midnight Pacific, that would be 1 minute past 3 a.m. Eastern. Okay, that's what I call the pit open in the European session. Now this is an example of not every trade works properly coming out of the box, and it's very important to have your stop and trade management here, regardless of what methodology you're using to trade with or the manner that you're entering trades. You must always have good viable stops, and as I indicated, these stops in this case are basically about 6 ticks, which is the width of this band. So the example here would be a long trade coming out of the box here on the pit open, and this is actually from August 7th. This is current today. Actually, if you watch the chart, it's trading live up here. But it was a long trade that did not really materialize at all. As we came down, you would hit the stop, and then you would go short, resulting in a bit of a scalp. You could get about 10 ticks on a scalp. Typically, if you can trade in increments of 2, in other words, enter 2 contracts, 4 contracts, 6, depending on your account size and appetite for risk, the best thing to do is to go ahead and take a scalp at the beginning, try to get 6, 8, 10 ticks if you can, and then try to hold on to a runner for a large gain. And generally that you can either move your stops to break even on the runner, or as I like to do, slightly negative of break even to give it a good opportunity for a run. So the first trade would have been long. It got stopped out, reversing to a short on a nice scalp, but no runner. And then as we came back up through again, depending on where your trail stop was on what I call the runner, you would have been out. But the good news is it entered the long trade here then about an hour and 15 minutes into the session, and it went ahead and moved up, and is actually, as we speak, we're moving higher still at this time. So again, demonstrating different time frames for different futures instruments. This is an occasion of trading the what I call the European session, the pit open of the European session. All right, here's another example. This is the 6B. This is the British pound. This was the trading from Monday, August 6th. And again, just like we had on the euro, the first trade coming out of the gate was long. It really did not amount to anything. Would have gotten stopped out and then reversed, but then the good news is it had a very nice move. Now this move moved pretty linearly down over the span of about 5 hours. And so in this particular case, the momentum is to the downside. So there would not be a long trade here. There would, of course, be a short trade. And again, the short trade, as I indicated, was a very nice trade to the downside. So this is a good example of not only using a time band based on the pit open that you're using, but also using a momentum indicator to help filter the direction of the trade entry. Now this example is the Canadian dollar. The Canadian dollar trades a little bit differently than some of the other currencies like the euro and the pound and the Swiss franc and even the yen, in that it really starts getting a lot of movement basically around 8 a.m. Eastern time. That's 5 a.m. Pacific. So in this example, the quote pit open that I'm using for the Canadian dollar is, of course, on my time, 5 a.m. Pacific, that's 8 Eastern. And just like I showed before, using both the combination of the pit open and a momentum-based indicator, you basically had a very nice short trade entry here. You did not have a long trade entry because the momentum on the bars was still down. So a nice trade to the downside for, again, a scalp, but as we call it, no runner. But then as we came back up with proper management, your runner would have been out at some point in time, whether it was slightly past break even or as we moved up through the top here, out here. But then as the bars turned blue and we broke above the our time band here, then this is the 5 a.m. time band, we had a very nice trade move to the upside. So I think you can see trading what I call the pit open time band has a lot of opportunities for traders because traders worldwide trade these markets differently. Some of you maybe overseas, some of you on the East Coast, some in Hawaii. So everybody has different time sessions that they can trade. And of course, the utility of this is that it enables you to trade in those time sessions and those instruments that best fit your trading. Let's take a look at a couple more examples, and I think by doing so, you'll get the complete overview here as to how to trade what I call the pit open using a time band and or with momentum if you choose to do so. Let me show one more example now. This is crude oil. A lot of you trade crude oil. Back in the old days, typically the pit open was 9 a.m. Eastern. That's 6 Pacific. So that's what I have this band set for. This is going to show an example again of the differences between using a momentum indicator to help you filter trades versus just taking them outright. And it's just a matter of preference as to what your appetite is for number of trades. In this example on crude, this was our pit open. And this would have been the long trade entry here if you were not using the momentum indicator. As we broke above it, it would have been long. As we broke down through it here, it would have been short. And then as we moved back up through it again, it would have been long. And this was in these time span here of about an hour and 10 minutes or so. Okay. What I wanted to point out was if you were using also a momentum indicator, such as the SEER, notice that as we move through the top of our time band, we were a fairly large distance away from our band based on the bar color. So because of that, this would be a trade that you would just have to pass on. The risk is too big on this. You always want to approach the markets from the standpoint of what is my risk at the beginning of a trade, and generally, as I indicated, because the bandwidth on this is 6 ticks, you want to keep it to a manageable level. So unlike not using a momentum indicator, which would have been the entry here, using the momentum indicator, you would have skipped this trade completely. However, the good news is later on, as we move through here, we had the proper momentum. We had a good short trade through here for a real nice scalp and no runner. And then during the last part of the session here, again, with using momentum, whether you use momentum or not, this would have been your nice long trade entry here for a pretty nice gain. So we didn't have a lot of big vertical movement here in crude in this example, but every one of these was a good manageable trade situation that you could have gotten through in the first hour. So again, that's how you trade what I call the pit open based on different time for your pit session or pit open session based on the instrument that you're trading. Again, equities are primarily in the first part of the a.m. which is generally what I call the European session, rather the U.S. Pit Open session for our equities. The currencies, like I showed on 6E, 6B, the Swiss franc, the yen, good European session opens. Crude oil, a different time here at basically 9 a.m. Eastern. And of course on the Canadian dollar, which it marches to its own drum, a little bit different time, and that's 8 a.m. Eastern. So I hope this was beneficial. If you're not trading this way, I would urge that you take a look at it. Try to combine, like I said, a time band with a momentum indicator if you've got those, because it will definitely enhance your trading. You should come out on the plus side pretty much every day if you're using the proper stop management as I've shown here, and just be patient. Not every trade works out, but as you can see, even on the ones that don't, it's relatively small losses, and then when you get into a nice trade, you can have quite a bit of a run. So thanks for watching. I hope this was beneficial, and I hope that you can take away from this a few good trading ideas to add to your arsenal. So thanks again for watching, and I hope you have a great day. Bye now.